The clash of the ages is here. Bitcoin, the revolutionary digital powerhouse, versus gold, the timeless symbol of wealth. Two completely different paths, yet both can lead to massive financial gains. But which one will you choose? In this video, we will put Bitcoin and gold against each other, dissecting their potential to grow and attain your financial freedom. From volatility to long-term stability, we will uncover everything you need to know before choosing the ultimate investment for your future. So make sure to watch till the end, because the right choice today could set you on the path to generational wealth tomorrow. In the world of investing, both Bitcoin and gold are valuable. However, their properties and aspects obviously differ. Lately, the debate over which one is better has intensified. So let's compare them both, starting off with Bitcoin. Bitcoin has been around for almost 2 decades now. It's crazy how the price of Bitcoin went from less than $1 to a whopping 73,000. The growth part is pretty self-explanatory. Despite experiencing a massive crash following the collapse of crypto companies like FTX, Bitcoin managed a remarkable recovery. The cryptocurrency's performance is heavily influenced by speculation, which is a lot different than traditional assets like stocks, which we know are tied to revenues and news. However, since the price is dependent upon speculations, it can suffer from dramatic fluctuations, making Bitcoin a high-risk and high-reward investment. Now, one of Bitcoin's most attractive features is its potential for exponential growth. Over the past decade, Bitcoin has delivered a staggering return of 3,700%. That is literally unbelievable. This means an annual return of 44%. That's 10 times more than most of the stocks. We know that Bitcoin's growth rate has surpassed many traditional investment options, but despite the growth, Bitcoin's supply has been limited. Capped at 21 million coins combined with increasing mainstream adoption, this has fueled the coin's potential for price appreciation. Another thing to know about Bitcoin is that it operates in blockchain technology, which means that it functions on a decentralized system that eliminates the need for central authorities like banks or governments. Suppose you are an investor who is wary of central bank policies and government interventions. In that case, Bitcoin can provide an independent financial system that allows you to conduct peer-to-peer transactions even across borders with relatively lower processing fees. And as decentralized finance continues to gain traction, Bitcoin's role as a digital store of value definitely has the potential to expand. The institutional adoption of Bitcoin has also been growing, with major financial firms exploring Bitcoin exchange-traded funds and blockchain-based solutions. Bitcoin's legitimacy continues to popularize. Thanks to the encrypted and decentralized system, Bitcoin is also pretty difficult to steal and fake. As for geographical use, it is generally legal to use across the borders of different countries, with a few exceptions. However, the regulatory infrastructure that could exist to ensure the safety of users is not yet available in many countries. While Bitcoin offers many benefits to investors, it is important to note that the cryptocurrency is highly volatile. With sharp price fluctuations that can result in significant gains or even devastating losses, Bitcoin is heavily influenced by market sentiment, which makes it an unpredictable option. And since we're talking about the risks of Bitcoin, we can't ignore the cybersecurity aspect either. As a digital currency, Bitcoin comes with risks related to cybersecurity, such as hacking or the loss of digital wallets. This means that losing a single passkey can literally take every cent of your investment from you. As for traditional investors, the absence of a physical asset itself can be a little off-putting. There is a problem with the liquidity of the cryptocurrency. Let's say you have 100 bitcoins, and now you want to get out of cryptocurrency in a hurry. You might have a hard time doing that. There are a few exchanges, such as Coinbase, that allow for cryptocurrency liquidation, but even Coinbase allows only $100,000 worth of cryptocurrency liquidation per day. For a pretty long time, Bitcoin price has been almost 100,000, and with the potential of an increase in the price, you might be only able to liquidate one coin in a day, so that can be a problem. We can't say if buying Bitcoin is better than gold because that completely depends on your outlook and preferences, but we can help you with your decision. If we look at the market price, then Bitcoin has been much higher than gold for quite a while. But while Bitcoin is limited to financial instruments, gold has more cases. Now let's take a deeper look at gold. Gold has been a source of wealth for thousands of years, favored especially during times of economic and geopolitical uncertainty. But it was in the 1970s when investors truly recognized the worth of investing in gold because that was when inflation surged. While gold prices have not exhibited the same explosive growth as Bitcoin's, they have consistently provided stability and protection against inflation. In the past decades, gold has offered an inflation adjusted return of approximately 30%, which means there has been an annual return of about 2%. We know that is massively less than that of Bitcoin, but it's perfectly fine if we look at it from a stability perspective. Gold has consistently proven to be an effective hedge against inflation. Often increasing in value when the cost of living rises, gold's established system for trading, weighing, and tracking is pristine. Unfortunately for scammers, stealing or faking gold is nearly impossible since it's highly regulated. In many countries, you cannot even cross borders while carrying gold without regulatory permission. Even when purchasing gold, you will generally only be able to purchase it from registered dealers and brokers. But I believe one should only invest in gold if they can safely store it. As for its use, it's no secret that gold has had more applications than any other asset. Currency, luxury, specialized usage in dentistry, electronics, you name it. This multifunctionality has given gold its ability to maintain value when other assets' values fall. The rarity is also another notable aspect. The supply of gold is more limited than that of Bitcoin, but the problem with gold is that if it runs out, we can't produce more. And since gold is used in everything from jewelry to cosmetics to electronics, it is always in demand. So while prices might fluctuate in the short term, they tend to remain relatively stable over time. But of course, even stability comes with limitations. First of all, there is modest growth potential, making it better suited for wealth preservation rather than wealth generation. Gold investments also involve additional costs, including secure storage insurance and potential transportation expenses. Gold might not be the most appealing option for you if you're looking for higher returns and greater flexibility. And even if you do choose to invest in gold, then you shouldn't keep more than 5 to 10% of your portfolio on gold. This is so that you can have room for other assets, like stocks, to create bigger returns. Moving on to deciding which one is better, as I mentioned, I cannot set a narrative for you. As an investor, you must weigh on the pros and cons of each. Which is better for you depends on your risk tolerance, investment goals, and of course, your preferences. If you are an investor who prioritizes stability and your focus is on long term goals, then you should go for gold. It doesn't require constant monitoring of news and trends, and it isn't influenced by speculation. Gold is often embraced by investors as part of a diversified portfolio strategy as well. But if, as an investor, you are willing to take a high level of risk for potentially high returns, then Bitcoin can turn out to be a better option for you. If you like the thrill of trying to time the market and you can afford to lose a large amount if you time it wrong, then you can consider Bitcoin. So this was a comprehensive analysis of everything you need to know about investing in gold and Bitcoin. Of course, both offer different benefits and drawbacks, but ultimately, it comes down to your choice. Whether you go for the digital dynamo or the golden giant, the key is to stay informed and invest wisely. And when in doubt, never hesitate to get help from a financial advisor. Share your thoughts in the comments below and make sure to subscribe to our channel so that you stay in the loop and never miss out on any of our videos. Subscribe now. See you in the next video.